Welcome, tech enthusiasts, to another thrilling episode of the Tech Stocks Daily Podcast, where we dive into the latest and greatest in the technology stock market. Apple Inc. common stock AAPL was in the news today due to the influx of detailed reviews of its newly released Vision Pro headset. These reviews provided insights into the headset's user experiences, ranging from initial excitement to addressing practical issues like discomfort after long use sessions. A key point of discussion across the reviews was the absence of a substantial number of apps, including a noteworthy killer app to justify the Vision Pro's high price point of $3,500. Despite some criticisms, the Vision Pro has been praised for its innovative technology, creating immersive experiences that feel almost magical when functioning correctly. The overarching narrative suggests that while Apple Vision Pro has the potential to revolutionize mixed reality wearables, its high cost and current limitations pose challenges for widespread adoption. NVIDIA Corporation common stock, NVDA, was in the news today due to spirited discussions among investors and enthusiasts on Reddit regarding its stock trajectory, notably influenced by its high price-to-earnings (PE) ratio, which stands at around 95. The conversations highlighted NVIDIA's significant growth in the chip and artificial intelligence (AI) markets, questioning if the stock remains a wise investment amidst its lofty valuation. The discourse extended into various aspects, including NVIDIA's competitive edge because of the complexity of its GPUs and Tegra devices, its innovation, technological advancements in AI and GPU technology, and the inherent risks such as potential technology shifts that could make current offerings obsolete for AI applications. Concerns about NVIDIA's dependence on external suppliers like Taiwan Semiconductor Manufacturing Co. Ltd. (TSM) for chip fabrication also surfaced, emphasizing the importance of securing chip production amidst potential supply chain disruptions. Despite these factors, there's acknowledgement of NVIDIA's current dominance and technological prowess within the community. Microsoft Corporation common stock was in the news today for a host of reasons that underscore its continued dominance and innovation within the tech industry. Key highlights include its collaboration with OpenAI's ChatGPT, the monumental $69 billion acquisition of Activision Blizzard, and navigating antitrust probes. These strategic moves contributed to Microsoft rewarding its investors with a remarkable total return of 56%, notably outperforming the S&P 500 index by approximately 32%. Despite the company's near $3 trillion valuation, questions about its future growth potential persist. Microsoft has showcased impressive financial growth, with a compound annual growth rate (CAD) of 14% in revenue from fiscal year 2018 to 2023, and an even more robust net income CAD of 34.6% in the same period. Looking forward, Microsoft anticipates continued double-digit revenue growth for fiscal year 2024. The company's strategic investments, particularly the $13 billion poured into OpenAI, reflect a significant bet on gaming and artificial intelligence sectors to drive future growth. OpenAI's ChatGPT, hailed as a game-changer, has propelled the company's valuation to estimates over $100 billion, with revenue pacing at $1.3 billion annually, a 30% increase from the previous summer. However, concerns such as antitrust probes and the forward price-to-earnings (PE) ratio, which stands higher than that of competitors like Alphabet and Apple, paint a complex picture for investors. Despite potential regulatory and valuation challenges, Microsoft's endeavors in enhancing its presence in gaming with Activision Blizzard and doubling down on AI with OpenAI place it at a pivotal point for its future trajectory in the tech industry. Shopify Inc. Class A subordinate voting shares Shop was in the news today as it is expected to benefit from its expanding merchant base in its fourth quarter 2023 earnings, set to be reported on February 13th. The accelerated adoption of Shopify products such as Shop Pay Installments, Shopify Markets Pro, Shopify POS, and Shopify Balance is anticipated to have driven the company's top line in the to-be-reported quarter. Additionally, Shopify's focus on expanding its merchant base and initiatives to offer a seamless, secure, and efficient checkout experience have been highlighted as key catalysts for its performance. The expected continued growth in gross merchandise volume (GMV) and gross payment volume (GPV), with estimates pegging GMV at $71 billion, indicating a 16.4% year-over-year growth, and GPV at $41.58 billion, has also contributed to the buzz around Shopify. The Zacks consensus estimate for fourth quarter earnings is pegged at 31 cents per share, representing significant growth from the 7 cents per share reported in the year-ago quarter. The overall market sentiment, as gauged from recent discussions and analysis, appears cautiously optimistic with undercurrents of concern regarding specific sectors and companies. Key trends include a focus on technological innovation, particularly in AI and gaming, as seen in major companies like Microsoft and NVIDIA. There are also discussions around strategic acquisitions, such as Microsoft's acquisition of Activision Blizzard and the exploration of new market opportunities. However, there are concerns about high valuations, potential regulatory challenges, and uncertainties due to geopolitical tensions and supply chain vulnerabilities. Investor discussions also highlight anticipation around the continued growth in sectors driven by technological advancements, though tempered by caution due to the high valuations and performance expectations baked into some stock prices. The sentiment around companies like Shopify indicates optimism based on expected earnings growth and market expansion. Conversely, sentiments expressed in options trading activity for companies like Arista Networks suggest a mix of bullish and bearish perspectives, indicating a divided outlook among investors. Overall, the sentiment reflects a blend of excitement for growth potential in tech and AI, cautiousness due to valuations and external risks, and a keen eye on strategic moves by large corporations that could shape market dynamics in the near future. Given today's news, here's a breakdown for one stock to sell, one to buy, and one to watch, along with the reasoning for each pick. Sell, Shopify Inc. Class A subordinate voting shares. Given the anticipation around Shopify's fourth quarter earnings, expectations are high. While the company is expected to benefit from its expanding merchant base and the accelerated adoption of its products, the stock has already seen significant appreciation. If Shopify's earnings report does not exceed the high expectations set by analysts and investors, there could be a pullback in its stock price. Additionally, the stock market often follows a buy the rumor, sell the news pattern, suggesting that Shopify's current heightened attention could lead to a post-earnings sell-off, making it my pick to sell. Buy, Microsoft Corporation MSFT. Microsoft appears to be a solid buy based on its strategic moves and strong financial growth. Its investments in OpenAI and the acquisition of Activision Blizzard underscore the company's aggressive push into AI and gaming, sectors with substantial future growth potential. With a 56% total return outperforming the S&P 500 and continuous double-digit revenue growth expected for fiscal year 2024, Microsoft's prospects look bright. Despite concerns over its forward PE ratio, Microsoft's innovations and strategic positioning in high-growth areas make it a compelling buy. Watch, NVIDIA Corporation common stock. NVIDIA is worth watching closely due to its cutting-edge position in the AI and GPU markets. While the company is currently trading at high valuations, making it potentially risky for immediate investment, its technological advancements and strategic importance cannot be overstated. NVIDIA's role in shaping the future of AI, coupled with the ongoing discussions about its stock trajectory, indicate that this company is on the cusp of potentially significant shifts. Keeping an eye on NVIDIA could provide valuable insights into when might be a more opportune moment to buy, especially considering the challenges and uncertainties regarding technology shifts and supply chain dependencies. Remember, investing in the stock market involves risks, and these picks are based on today's specific news context and not a comprehensive financial analysis. Always conduct your own research or consult with a financial advisor before making investment decisions. Today's market activity was a vibrant showcase of the tech industry's dynamic nature, with key stories highlighting both opportunities and challenges within the sector. From Shopify's anticipated earnings report signaling potential growth to Microsoft's strategic moves in AI and gaming pointing to a bright future, the day offered investors much to ponder. Meanwhile, NVIDIA demands attention for its pivotal role in AI advancements, despite valuation concerns that encourage a cautious approach. Each of these stories, from earnings anticipations to strategic acquisitions and the relentless pace of innovation, paints a picture of a tech market that is ever evolving, ripe with opportunities for the astute investor, yet fraught with complexities that warrant careful consideration. As we close the day, the blend of optimism and caution encapsulates the multifaceted landscape of tech investing, signaling an intriguing path ahead for those navigating the markets.